This is our Forex blog for March 1st, 2013, and I'm releasing a new version today which has a brand new tool called the Perfect Oscillator. And I gave it that term because it is a perfect oscillator. It doesn't use periods like the MACD, stochastics, and pretty much every other oscillator I've ever found has a number of periods. And so if you use 14 periods, if there was a big bar 14 bars ago, and when the next bar starts, that big bar drops off and the indicator value dramatically changes. This one's also based on statistics. For each currency, for each time of the day, low volatility periods, high volatility periods all get reflected automatically in this. And basically how to use it is pretty easy. We got the zero line in the middle, 80% of maximum volatility, 80% of minimum down volatility. And we have a moving average of my indicator, and we also have Bollinger Bands of my indicator because these let you see when price is likely to reverse. Okay, so we're starting the day off. You can see the euro dollar is going up, and there's a lot of ways to trade with this, but if you saw the euro dollar as a longer term trend is down, when you get across, or let's just say it hits the 80 level up here, notice that's extreme overbought and the market's likely to reverse, and guess what, it never goes maybe more than a pip higher and reverses. When price breaks through the Bollinger Band on my perfect oscillator, that's a really big sign of incredible strength. Either it walks the Bollinger Band or it pierces it and goes through it, like you can also see right here. That's an incredibly powerful up move, and you can see for a while it tries to go higher and it fails. Also, as it tries to go higher here and here, it's not able to hit our plus 80 level, or is it able to hit the upper Bollinger Band, which shows it's lost its upwards momentum and the clear downtrend is likely to reverse. During dead times, you pretty much can just trade these. When you see a downtrend like this and the market goes up and it hits the upper band, usually it's a pretty decent place to start looking for sells. Notice within a couple bars it starts falling and falls 30 pips. Notice how many times it hits the lower band and reverses back up. Right here, reverses up. Right here, reverses up. And here it exploded through the upper band. So here's your first clue as you're watching this, that wow, for the last 3 hours, price was totally contained inside, or I should say my indicator, perfect oscillator, was totally contained inside the Bollinger Bands of this for the most part. Here it shot up. And because this was trending down for so long, and you can kind of draw your trend lines over here, you can see it finally started to break through that. It didn't make new lows. When you have a breakout over these highs, you want to be aware of that. As we go bar by bar, notice it's exploding up. You may not want to just get in there, but this is the first sign that the downtrend might be over. You might want to look for buys. Now you can see as we go forward here that for this time of the day the market is incredibly strong, but the trend has been down, so we don't know if the market's just going to work its way back up to maybe the 38 or 50% fib level. I would expect it might stall out here. It's very likely to stall out between the 50 and 62% fib level. But you can see it's incredibly strong. If you get a little bit of a pullback and you want to buy it, buying it at the zero level is usually a good deal, and also at the lower Bollinger Band of my perfect oscillator. So at this point, it's very likely to reverse at one of these levels. You can see it's way above the 80 level. It's actually stronger at this point than it has been in the last 20 days. So this is an incredibly strong move that you want to be very careful getting into a counter trend move. But a lot of times when it busts through the upper Bollinger Band of the perfect oscillator and comes back underneath it, it's a pretty decent place to sell. Also, when it breaks, when the green line breaks the moving average, it can be as well. All right, so it breaks. It actually was so strong and shot through the chart. You go short here when it breaks the low here at 31 with your stop right above the high. And you can see, that counter trend trade. You would have been probably short somewhere between 32 and 35. You're up 10 pips. Another way of trading using the perfect oscillator is when the moving average of the oscillator is above the zero line, you're basically looking for buys. And when the moving average is underneath the zero line, you can see from pretty much here all the way until here, you're focusing on sells. And so earlier today we were looking for buys. You can see during this pullback right here, the moving average is still above it. So we look to buy here. As the price goes back up, guess what? The perfect oscillator's moving average is underneath the zero line, so we're looking to get out of that trade, flip and go short, and you caught that, nice move down, pretty early in the day. So let's take a look at some of the other pairs, and I'm just going to put a 5-minute chart on here so it becomes easier to find. Explosive move down, comes up right here, hits the upper Bollinger Band of the indicator. Notice how almost perfectly that timing is to go short. Notice again right here it hits the upper one, as is right here. This one was a little bit early. It shoots through the upper band right here. But most of the time the band of the perfect oscillator contains price. And when you see an explosive down move like this that goes below the 80 level, and then subsequent moves down aren't able to even hit the 80 level or come real close to it. Notice this makes a lower low, but the oscillator makes a higher low. It also is right at the band. This is a pretty decent place to do counter trend trade, and you can see you pretty much got into it within a half an hour. It shot up, and that's a pretty decent size counter trend move of about 40 pips. Let's take a look at some of the other ones. Notice the moving average went back above the zero line here. This pullback right here hit the lower band. This is a pretty decent place to get in, as is this right here. When you have an uptrend, wait for basically the lower band to get hit to do your buys. Notice again right here. Pretty much is a perfect oscillator in terms of at extremes. The plus 80 level right here, the market kind of stalled. Right here it's up a little bit too much. You might want to look for a counter trend trade. Again right here it's at an extreme. Notice the market pretty much topped here. You also have a double top right here with a significantly higher or lower high than before. It's been going up and hitting the 80 level, coming really close, going past the 80 level. This one, it's the first time it tried to go higher and it failed. And so notice how that pretty much can be used as a divergence method of finding the absolute high. And typically once the market makes a big move up, it's gone more than it normally does in a given day, you might want to wait for at least a 38% pullback. So this came down to the 38% level. You can see it's dramatically oversold right here, and you got a nice little 20 pip bounce off of that. You might also have consider looking into a buy right here. If it goes above the high, it never did. You got a little bit more of a pullback right here. It's underneath the band and comes back above it. That's usually a decent reversal area. At this point you're looking for buys by just waiting for price to go above the trend line over the bar's high. That's why I typically do, just to avoid getting into a little trade, getting stopped out, having to get back in.